Hello, VedaVia community. My name is Helmer. It is December 6th, 2023 still. And this is your weekly mortgage market update. Have this all ready for you. Joined this week with our guest, Clyde Penton. Clyde, please take a minute. Go ahead and tell everybody a little bit about yourself.
Hey, everybody. How's it going? Clyde Penton here, VedaVia loan originator. Been in the mortgage industry for about 16 years. Got a family, live over here in Georgia, and I just enjoy spending time with the family and helping folks realize their dream of homeownership, especially educating about the VA loans. So I appreciate you having me on here today, Helmer.
Awesome. Well, thanks for joining us, Clyde. Remember, everybody, as of right now, it doesn't look like we have anybody on live, but usually they kind of join in as we're going there. So if you are here live, go ahead and let us know. Give us a hashtag live in the comments. If you're watching on the replay, as many of you probably are, go ahead and just give us a hashtag replay in the comments. We do monitor the post. If you have any questions or want to share your thoughts on anything we talk about today, go ahead and put those in there. Remember that you can go ahead and tag Clyde Penton. He is one of the moderators here at VedaVia. Or you could always tag me. That's Helmer. So otherwise, let's jump right in and let's talk about rates and stuff. So as we talk about rates, remember that this is not an offer to lend. When we talk about rates, we're talking about averages and generalities. We want to give y'all some insight into what's going on in the rate market, just a neutral place to get information that you can count on, that we don't have a dog in the show, if you will. So, but you do want to make sure that you shop around and shop your interest rates. So what's happened since last week when we had this wonderful meeting? Rates are continued to move lower. And although most of the movement is in what we call rebate pricing, meaning the credit that you get towards your closing costs or the cost to buy down the interest rate to get to a rate. VA rates are in the VA rates are in the low to high sixes. It's kind of a range. You tend to see that when we see a lot of rate movement like we see right now. If you're getting quoted rates in the low sixes, though, that without paying any points, that is possible. And you may also see rates that move up into the higher sixes, depending on your credit score and your unique situation. So keep that in mind. Conventional rates, if you're not using your VA benefit for any reason, conventional rates are averaging in the sevens still, but we are on the doorstep of those sixes and we're knocking hard. And there's some events happening this week and next week that could help us to see rates go lower and break down into those sixes. So looking at a forecast and where we think things are going from here, the worst rates should be behind us. In October of 2023, hopefully we circle that on the calendar and we could say that was when we saw the worst rates, and hopefully we'll see again. And they're a little good for that right now. Rates should improve through the next week as markets speculate that the Fed has gone from a stance of what we called higher for longer, meaning that they were going to hold their Fed policy rate higher for a longer period of time through 2024, to where markets now think we're going to see something that's more like lower more quickly. And I'm going to show you guys a quick chart and explain that a little bit more in a moment. But just to keep moving, rates will move lower if Friday's jobs data. We're going to get data on Friday morning, 8:30 a.m. Eastern time. The technical name for that stuff is non-farm payroll data. We're going to see some wage inflation data and then unemployment. And if that data just comes in just right, kind of Goldilocks, not too high, not too low, but showing a softening in the labor market, then that's going to help us to see rates improve as we close out this week. For next week, we're looking for inflation data that would show that inflation has indeed improved and is continuing to go down. And we're not expecting any big moves, any big miracles, but it was just in November, we saw an improvement of 0.1%. That's right, 0.1% that actually helped push mortgage rates lower. So hopefully we see some more action like that. And then next week on Wednesday, we have the Fed meeting. It's actually the conclusion of a 2-day meeting where the Fed will come out with their policy statement, and then they will go ahead and tell us, what they expect things to be. And then we'll have Fed Chair Jerome Powell's press conference. Now, when it comes to the Fed, this tool here, this is by a company called CME. They are a group for analytics, and this is their FedWatch tool. And what we're looking at is a graph that tells us, hey, how likely is it that the Fed is going to raise or cut rates over the meetings that we have here on these tabs? The meeting we're looking at is this month's meeting next week. Right now, there is a 97.7% probability that interest rates will remain exactly where they are when it comes to that Fed funds rate. So they don't control mortgage rates, but they do control what we call the Fed funds rate. Then on January, expectations that it'll also remain very similar, that we shouldn't see too much movement. But by March, markets now believe there's only a 40% probability that we will see the Fed maintain this Fed funds rate until seeing the first cut in March. Earlier this year, or even just a couple of months ago, even a few weeks ago, we were seeing expectations that markets thought that we wouldn't see our first rate cut until June. Now pricing in March, much sooner. All right, so keep that in mind. There you go. I hear you, my friend. So keep that in mind. There is a lot of expectation. Waiting to see if I still echo. Something else is picking me up, and I'm hearing me as I talk. There we go. I muted you for now, Clyde. Look to mute and unmute yourself because I'm getting a lot of feedback of myself through there. The speakers aren't canceling out. So anyway, there's a lot of expectation right now that the Fed will have to act sooner, which would bring us into maybe March. And because of that, that's why you've seen mortgage rates that have improved as much as we've seen, and why we're likely to see rates continue to improve a little bit more as we head into next week. So if we get good inflation data and the Fed meeting and the Fed policy statement and the press conference go our way, we could see mortgage rates move lower. But one thing to note here, and there we go. So over the next 15 days, rates very likely could move lower. And it won't be huge moves, but we could see conventional rates push into the 6s. You could even see some VA rate scenarios that move into the 5s, which would be fantastic. Now, you may be able to get rates in the 5s right now, but you may have to buy it with points. And for those of you that aren't too familiar with the vernacular, points are when you are paying a money up front to lower your interest rate. We call those a discount point. And a point is 1% of the loan amount, although you don't always have to pay in full increments of, say, a point. Sometimes those will be smaller. So anyway, you can see that, but rates are likely to move low over the next couple of weeks. But then once that Fed meeting is over next week, it's likely that we see mortgage rates kind of stabilize. They'll probably stop creeping down lower. So if you're under contract now, it's a good time to be watching rates, talk with your mortgage professional, stay tuned to what's happening, but don't think that rates will continue to just move lower from here through 2024. It tends to happen in waves. We're going to see sometimes where rates will actually move higher again before taking a step and then moving lower again. So that's all normal, and rates should move lower as we head into 2024, but that move will likely be slow. So with all of that out of the way, and Clyde, it looks like you've got most of the technical stuff out of the way here. What do you think about all that? How are rates in your neck of the woods, and where are you in the country again? Remind everybody.
So I am in Georgia. So I'm in the Southeast. I help folks mostly over in this area.
Okay.
So rates are definitely trending in a positive direction from a home buyer standpoint. Right now, I think there's kind of a sweet spot between rates starting to trend a little bit better. I think they said they're at 3-month lows or something like that. But they're starting to get a little bit better because they were creeping up to the 8s, like pretty straightforwardly. Like they were 8% was a real thing.
October 19th is the date I have.
That 10-year Treasury bond was pushing back up towards 5 again, and it's back down to 4.2, I think. So again, that being one of the things that is an indicator of what mortgage rates will do, the 10-year Treasury note. So I'm seeing them come down. Starting to be able to quote people with either better rates or better cost, depending on their credit score. It's starting to make more sense. Again, we've got a lot of folks with VA home loans here. I know, like one of the down payment assistance programs that I work with in Tennessee, it has programs for VA buyers if they need money for a closing cost, and it's had like 4 rate drops, I think, in the last like 2 weeks, like eighth of a point, eighth of a point, eighth of a point, because it had run up, pretty substantially over about a 30-day period. It went from about 5.75%, I think, up to 7.25% or something like that. And now it's dropped back down, several times over the last couple of weeks. So it's good to see those things, because that will help with some of the affordability challenges. Still seeing sellers give some closing costs in different areas. Just depends on the home, though, right? There's no absolute answer there, but I'm starting to see that more often. I think right now, as I was saying, it's kind of a sweet spot, because you can get a little bit of closing cost assistance from sellers in most areas, and the rates are starting to trend down a little bit. Whereas I think come springtime, if rates get any lower, I think it's going to be a pretty interesting, we'll call it an interesting spring market, because the spring market typically opens up and there's a few more sellers and a few more buyers. But if rates trend in a positive direction for buyers, right, if they go lower, I think there may be some pretty serious competition in the housing market. So we may start to see some things where people are overbidding for homes relative to what their list price is. So
how does that come into play? Why would someone that's thinking about buying a home, why would they not want to wait until rates continue to drop or get even further lower? Just repeat that. I know you just said it, but I think that really bears.
Sure. So it all depends on the market that you're located in, right? In the housing supply. But I will tell you that here in the markets in the Southeast, they're building as builders, but there's still tons of growth here. So people are moving here, right? So not only do the people that live here need to be able to buy homes, right, that no longer want to rent, but the people that are moving here, like people are moving to Tennessee like crazy. People are moving to Georgia like crazy. North Carolina like crazy. People are starting to even look at Alabama a lot more now. And that wasn't a thing a few years ago. Alabama wasn't a place, but now people are like, wow, property taxes are low. People really like the areas of like Huntsville and down towards the coast in Alabama. But, all right, the point I'm making here, right, is when there is more demand for homes, when more people live and are moving to a place and there are not enough homes for them to buy, then people start bidding over the list price. So if a home's listed for, let's say, $350,000, you may have somebody moving from California that just sold their home out there that doesn't mind paying 10% or 5% above the list price. So when rates get to where they're a little bit more, a little bit lower, right, that is likely to pick up. And there's no guarantee, right, of anything in the world or in this industry, but that's what we saw a couple years ago, right? Now, granted, rates were in the 2s and 3s and even 1s in some aspects, right? But people were definitely fighting. There were multiple offers. Like, man, I know some people. I want to say, man, people bid like 100,000 over, like, on like $300,000 or $400,000 homes, right? Like, it was super common in North Carolina where there's non-refundable deposits. I heard of people putting like, I don't know, $25,000 and $50,000 non-refundable deposits on purchase contracts because they were perfectly fine with paying whatever they needed to pay over the appraised value. They didn't mind paying that 25 or even 50 grand if they needed to over the appraised value. So those are the kinds of things when rates go down and there's still not enough housing to support the number of people that want to buy a home, then you're going to likely have to duke it out. Whereas right now, there's still some people out there, still not enough supply right now, but people have kind of pulled back in certain areas and certain markets. Again, people still need to buy homes, but yeah, it's a fine line is really the best way I can put it, of where, you got the sweet spot. And I think right now it's getting there, right? As rates are trending a little bit better. And it's still, it's not even wintertime yet, right? We're still in the fall officially, right? We're still not even into winter. So as these rates continue to, kind of move this way, it may be a good time to get in now. I know the recent trend, and this is market specific too, right, Helmer? I know you look at the numbers, I've seen them, other people that are shopping, they may have seen them too. Most markets, and I think the average across the country was what, 5.2%? Don't quote me on that, right? But around 5.2% increase in value of homes.
Okay,
still.
So when you talk about
they thought housing prices were,
you're talking about home prices
were actually going to go down this year, and that I think they dipped for like 1 month, Like, and then they've gone up, and they've been up around 5 or 5.2%, I think, year over year. So, I mean, if you've got to refinance and it costs you a couple of percent in closing costs, whatever that looks like, right? I mean, if you're gaining 5 and you're planning on being there for a little while, you may as well go ahead and buy when you can buy, when there's less competition, when you can get more help from sellers. Your rates go down and there's more competition, the likelihood of getting money from a seller for a closing cost is lower. And he's saying it can't happen. It's house specific, market specific, situation specific. A seller may need to sell their home today, and they can't wait until tomorrow for there to be an open house even, right? That happens. But again, these things are likely based off of recent history, the things that we can see that will probably occur or are likely to occur. We can't say they will occur, but they're likely to occur. As rates get back into, if they get down into the 5s, I think we could, after being close to the 8s or even in the 8s for some people, I think if they get
Yep.
a lot, looking to buy, so I think the competition will be pretty fierce at that point.
Yeah, absolutely. So definitely, I agree with you, and that's one of the things that we've pointed out for everybody. It's still there. We're having some technical issues.
I'm here. Yeah, can you hear me?
I can. Yeah, you're fuzzy, but I hear you. So yeah, no, I agree with everything you said. I hopefully, you know, everybody was able to hear that and grab that message from there. So anything you would leave everybody with before we wrap up for this week?
Man, if you're to buy a home, I would say now is as good a time as any over the next 6 to 12 months. So I think that that's something that you want to go ahead and do. Get things set up for yourself. At least have a plan put together. If you're not ready to buy right now and you still want to wait, at least get a very good plan put together for yourself. That way, whenever you're ready to actually pull the trigger, that you can move forward full force, and that there's no delays or any things that are holding you back. So again, if you're not wanting to do it now, if you're still wanting to wait, get a good plan put together and be fully prepared to make your move when it's time to make your move.
Yeah, no, I absolutely agree with you. So, well, again, thanks for joining us, Clyde. Appreciate you, sir. And everybody else, we will see you next week. Remember, we do this each and every week. You can join us. It is at 12 p.m. Eastern, 11 a.m. Central, 10 a.m. Mountain, 9 a.m. Pacific. And I hope next week we've got some more good news to bring to y'all as far as rates improving a little bit between now and then and forecasting to be even better. So take care, everybody.
Awesome. Thanks, guys. Thanks, Helmer.